Bob Utter back from Journal's Economist, and he's going to turn Wednesday's report.
The report Wednesday is going to be a classic case of expectations versus reality. The expectations is that corn and bean acres are going to grow. The challenge is by how much. The question that everybody's asking is where all the acres add up. At the Outlook Forum earlier in the year, USDA said 88.4, which does not mesh with all the reduced wheat acres. But I would challenge everybody also to be very cautious and being too optimistic in saying this USDA report is going to reflect all the acres out there, because there's still a lot of uncertainty as to how many acres are going to be planted on corn and beans because of the weather influence. I think the average trade grass is probably saying we've gone from 86.5 last year. We're someplace in this 88.5 to 89.25. But long term, I think everybody's trade expectations, we will exceed 90 million. This is why corn is having such trouble rallying, as with the markets, even with the corn and bean. The bean market was very strong today. So prepare yourself for 88.5 to 89. The initial reaction will be positive, but the trade reaction also was to say this is a beginning figure. It doesn't reflect a total number. So it really comes down and puts a lot of pressure on the market reference to spring planting. The crop gets planted. I would challenge you that the corn market high is in, and if we are closer to the 90 million acres long-term, actual confirmed in the June acres report, that would be quite pessimistic, and that would actually increase carryover in corn, adding to significant fall weakness. Our primary position has been over the last, in the month of February and March, for feed buyers to get feed hedges in place. We have been accumulators of feed hedges through July on corn and on meal. We have bought here in the market on expectation of some seasonal price bounce in the market. However, our biggest primary concern is for the seller of product, both old and new. The recent rally in old crop corn and beans due to the dog strike in Argentina, we believe, is a short-term phenomenon, allowing bean markets to ratchet back, and we are a strong candidate for selling old crop beans any place in this $10 level. As for old crop corn, we have this report tomorrow. I don't think it's going to have a major impact on old crop corn. It's going to make it very difficult to get corn back in the $4 range. Our long-term objective right now is looking for a 405 to 415 December corn price selling target objective. The only way we think that price can be exceeded and test the January highs of 450 is with a significant weather event. So right now, from a planning standpoint, we will be wanting to advise clients to be a strong seller in the $4.15 price level based December corn.